Hey guys, what is going on? Welcome into the video. So in this one, I'm going to be going over what to expect next from stocks in the week ahead, which is including some very important catalysts next week. Along with that, we're going to be going over a bunch of individual trade ideas, and I'm watching in the week ahead as well. As always, there are timestamps in the description, and let's go ahead and get into it. So starting out by taking a look at the S&P futures chart. Last week we talked about how it had just broken out of the 1 month long consolidation range, with 4830 to 4841 being the breakout trigger. So there was no bear case as long as this zone held, and the expectation was for this breakout to continue and follow through higher as long as the breakout did not fail, and that is what ended up playing out. It built out a bull flag last week before seeing a leg higher into the 4930s and then chopping around there to close the week. So into next week, there are some well-defined pivot points that we can watch for market direction. 49.34 is the key resistance that it needs above for a leg higher. 48.98 was the breakout trigger from Wednesday and acted as key support on Thursday and Friday, and 48.73 was the bottom of last week's range. And below there is that 48.30 to 48.41 zone, which, like we talked about, buyers have full control of the trend as long as above there. Price could sell all the way down to 48.30, and it would just be a simple backtest of the breakout as new support. This being said, though, we have a very volatile week up ahead with some very important catalysts. On Wednesday, we have the Fed's interest rate decision at 2 p.m. Eastern, Powell's speech 30 minutes after that, which is usually a big market mover, and then another big economic catalyst is the U.S. employment report on Friday. Along with this, we have a huge week of important earnings ahead, with some of the biggest ones including Microsoft, AMD, Google, Apple, Amazon, and Meta. All of these have the potential to move the market in a big way if there are any surprises. So saying all of this, expect big volatility next week, which also will bring along trading opportunities. I would personally love to see a backtest of 48.30 to 48.41 on the S&P, which from there could either resume upside or start a real market pullback on a break and hold below there. So now getting into some trade setups for the week ahead, starting out with the Russell 2000 index, ticker symbol IWM. So I went over the setup last week and talked about how it was a main focus for me on a breakout above the 192.3 to 193.15 zone. So this played out, but pretty much in the worst way possible. It had a large gap up on Monday morning, which was the breakout trigger above 193.15, and then after that it just straight chopped the rest of the week. How I personally traded this was I entered a starter position in calls on Monday morning and then got stopped out for a small profit on Tuesday's gap up and fell back down. So that was it for me trading IWM last week. Pretty disappointing action for how strong the technical setup was, but this is staying at the top of my watch list for the week ahead and we'll likely see a large directional move. So the bull case is pretty simple on this. It has built out an inverse head and shoulders pattern where a break above 198.5 will be the breakout trigger and likely move to 200 plus above there. I would take some caution here though and not try to anticipate the breakout. Just due to the price action last week, it had multiple opportunities to break out, and every time it gapped up after Monday, those gaps got sold back down almost immediately. Now that doesn't mean that it won't break out to the upside, but it does tell you that buyers are not very strong on this just yet, and this could break to the downside as well. If we take a look at the daily chart, it has currently formed a double inside candle, which is likely to see an explosive move in whichever direction that it does break in. So I'll be watching this setup closely into next week, with 198.5 being the breakout trigger and 194 being the breakdown trigger. And because of the volatility we expect next week, I would definitely be playing this with tight risk. So for example, if it breaks above 198.5 and I enter a long position, I would be playing it with the tight stop loss back below 198 or so. If it breaks below 194 and I enter short, I would be doing the same thing, playing it with a stop loss back above 194.5 or so. But whichever direction it breaks in, it's certainly worth taking in my opinion, as if it follows through, it will likely do so in a big way. So now getting some more trade ideas for the week ahead, starting out with Airbnb. So this stock is built out a pretty textbook inverse head and shoulders pattern, and it's currently testing the neckline and breakout trigger at 150. If it's able to break and confirm above 150, I would be watching this for an explosive leg higher, which can target 164.3, 180, and then 187.5 as those initial target levels above. And as a reminder, how you want to trade breakout setups like this is enter once it's able to break and hold above the key resistance, which is 150 in this case, and then play it with a tight stop loss back below in case the breakout fails. So for example, let's say Airbnb breaks out, I may enter this at 152 or so if it confirms above 150. I would then put in a stop loss a little bit below 150 in case that breakout fails, say at 149 or so. And in doing so, I have about 2% risk on the trade if the breakout fails, and obviously unlimited upside if the breakout holds and follows through to the upside. Another stock that I'm watching closely in the week ahead is Applovin, ticker symbol APP. So this stock has been building out this bull flag since July, and $45 is the key resistance and trigger for the breakout on a break above there. Zooming into the chart, we can see that it is getting very tight below the breakout level, which is often what you see right before it does break out. If it is able to break and hold above 45, this is on watch for a big breakout move, which can target 50, 62.6, and 75.25 as those initial target levels above. Snowflake, ticker symbol SNOW, is another that is potentially setting up for a large breakout, so it has been basing below 205.6 for the better part of 2 years and has been testing that level for the past week. Zooming into the chart, the 201.6 to 202.85 area was the top of the range of the more recent base and is an important spot to watch for Snow to potentially put in a higher low before re-attempting that breakout above 205.6. If it is able to break and hold above 205.6, watch for a large move to play out to the upside, which can target 232 and 269.6 as those initial levels above. And one more close watch for me in the week ahead is Intel, ticker symbol INTC. So Intel reported earnings on Thursday, which included disappointing guidance, and this resulted in a large gap down for the stock on Friday. So what this has done so far though is just a simple backtest of the key long-term zone at 42 to 43.5 as support, and if it is going to hold and bounce back, this is the place that it's going to do so off of. So in order to enter this, we'd want to see a strong push off the support zone, and then it would need to reclaim some key moving averages. The 200-week moving average is at 44.89. The 50-day moving average is at 45.79. So if Intel is able to find strong support off this zone, it will attempt to reclaim those moving averages at 44.89 and 45.79. And if it's able to get back above there, it can head much higher, and this is a very viable dip if so. So that is what I'm watching for in the week ahead. Expect big volatility, which also brings opportunity. I will catch you all next time. Thank you guys for watching. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and I answer any questions you have in there. I'll catch you all next time. Good luck trading this week, and peace out.